Hey, how you doing, Clayton? This is Daryl Stone from Queens, New York. You actually answered one of my questions on our podcast, episode 825. I have another question for you today. So I'm starting to learn about infinite banking and the benefits and what you can do with infinite banking. And seeing that I have an issue with my credit and cash already, not necessarily so much cash, but definitely credit. I can see what I can do with infinite banking. So my question is, do you think it's a strong strategy to build with infinite banking? And if so, would you start with infinite banking and then make your way into real estate, or do you think it's better to start with real estate and then work your way into infinite banking? Thank you for your time. Hope to hear from you.
Thank you, Daryl. Boy, that's a tough one. I mean, look, again, let me preface this by saying I'm not a financial advisor. I am also not an attorney, so I can't tell you one way or the other, like what to do specifically in your situation. But let's just kind of break down what a whole, first of all, the infinite banking concept. Okay. It's a little, as I've talked about here on the show before, and I've interviewed guests here on the show who are big advocates of the infinite banking concept. So I will make sure that we have a link in the description of this episode for you to go to check out those full episodes that we've done on infinite banking. Okay. Now, basically, and in my notes that I have from my interviews on infinite banking a number of years ago, Natalie and I have looked deeply into this, and in the end, we just never pulled the trigger on it. As I've said, but infinite banking basically, to sum it up in like a 3-sentence sum up, is a personal finance strategy that basically takes a whole life insurance policy, okay, and uses it as your personal bank. And this includes taking out loans against the policy and growing cash flow using the policy's dividends, okay, because a whole life insurance policy will provide dividends. And so you can then use that as cash flow. And really, you're almost paying yourself through this strategy. Now, again, if you ever had a chance to, and I wish I remember the name of the show, it wasn't Billions. It was a story about, I believe it was a story about the Rockefellers. And forgive me if I'm wrong about this, but I think it was Donald Sutherland who played the father, and is explaining the family's strategy for wealth building. And the brilliance of the Rockefellers and others is that they used this strategy in many ways to use their own insurance company to borrow from. So they're basically creating their own other company that becomes their own bank, right? And that is really how the Rockefellers did it. It's not just that they were borrowing from other banks, they became their own bank in a lot of ways. And so in a smaller way, maybe not the Rockefeller size, you're kind of doing it that way as well. Now, you asked the question as to whether or not you should put off investing in real estate in order to build this personal banking strategy. And frankly, I don't know that you need to. I don't know that you need to wait. I'm always a fan of, I want to start building my asset portfolio as soon as I can personally. Again, this is my personal choice. So Daryl, your mileage may vary on this. Personally, I want to be acquiring assets while I'm paying down debt, or I'm, building a personal banking strategy like this, using the infinite banking strategy with a whole life insurance policy, and I'm getting dividends, etc. Again, I would want to be doing it in tandem with this process. Now, that may mean that you're not putting as much money as you would like into the policy, right? Or it may mean that you're not buying as much real estate as you'd like. But in the end of the day, I'd rather, instead of waiting 5, 6, 7 years to buying real estate, I want to start now. Maybe I don't buy as much because I'm also doing this infinite banking policy. So I get where you're coming from because your credit score and you're worried about that as a possibility. And so this strategy, you're borrowing from yourself, right? So you don't have to worry about what Wells Fargo thinks of your credit score. Now, I will also give another option for you, Daryl, which is also the idea of a non-recourse financing loan. Now, again, at our company, at Morris Invest, that's something we do. We partner with over 100 different lenders that we work with. And a number of those lenders we work with will offer non-recourse financing. And that helps people that don't have maybe great credit or are international investors, so they don't have an established U.S. banking structure. And the interest rate is not going to be that much higher than what you're currently paying with a conventional loan. Maybe a little bit, 1 or 2 points. It's not going to be that much higher. But the beauty of that is then it doesn't matter what your personal credit score is going to look like fully. They're going to still glance at it, but it's not going to be the main driver. So if you've had some issue in the past, or you've had some personal banking issue in the past that's caused this problem, a non-recourse loan is going to look at the asset itself and be able to provide you financing on the asset itself rather than on you and your personal credit score. And they're also going to ask you that you buy the property in an LLC. Okay, they're not going to want it in your own name. So there's a lot of benefits to non-recourse financing. I just wanted to throw that out there as another option. Another option, Daryl, might be that you have some retirement money that you're not thinking of that you could borrow against, maybe a 401k that you could borrow from as a down payment, or leveraging that also to start investing. So I hate the idea of someone, because I get this question a lot, hey, Clayton, should I pay down debt first before I start investing in real estate? And I mean, you could be paying off debt for 30 years, right? And in that 30 years, you haven't bought an asset. So no, I'm not personally a fan at all. In fact, I've written a whole book on this, which is called How to Pay Off Your Mortgage in 5 Years. It's on Amazon. If you check it out, it's the blue cover. That's the newest edition. But what we talk about is paying down debt, but also acquiring assets simultaneously. Because I just don't want you to wait 50 years. What's the point? Yes, you can pay down debt and also acquire assets to build up that part of your portfolio. So that's my suggestion on that. Again, the whole, the infinite banking concept is powerful. It does require some upfront capital, and it does, of course, require you to stay in this policy for a length of time, a number of years. So this is not, this is not something you're going to get into and then get out of very easily or very quickly. You're going to stay in this whole life insurance policy for a number of years, and you have to be in it for a number of years until you really start to get the benefits of being able to take loans out against it. So that's just something else to consider. But again, I point you to those episodes that I did with some infinite banking experts that we had on the show. Much better. We go much deeper into those questions on that show, and we also dispel some of the myths on the infinite banking concept. So again, some of the naysayers out there that say you can't do it, or we address some of those issues with some experts that we had on the show to discuss it, who do this full time using the infinite banking concept. So Daryl, I hope you found that helpful. Thank you for the question. Thank you guys for your great questions. Please leave us a voicemail question. You can go to our website, Morris Invest. That's MORRIS invest.com. There's a microphone icon on the right-hand side of the screen. Click that, leave us a 30-second voicemail question or less. And while you're there, please grab the Freedom Cheat Sheet. You can do that right there at morrisinvest.com/freedom. And that'll help you on your roadmap to financial freedom. Now go out there, take action, and become a real estate investor. I believe it's the number one way to build wealth. We'll see you next time, everyone.